Phillip Capital's media host and presenter, and I'm looking forward to this interview today. We've got with us one of our very own, Timothy Ang. Today, we'll be discussing the U.S. markets and tech stocks in particular. Welcome to Tea Time Tuesday. Timothy, please tell us more about yourself.
Hi, Roshan. Thanks. I'm a research analyst at Phillip Securities Research. Together with my team, we cover the U.S. big tech FANG stocks, including Facebook, Apple, Amazon, Netflix, Google, and Microsoft.
Awesome. Let's begin. The last few weeks have seen a great deal of volatility in the U.S. markets. First, it was worries about U.S. inflation and interest rate hikes, and more recently, the Russia-U.S. conflict. How has this affected U.S. tech stocks?
The FANG share prices have been under pressure since the Fed turned hawkish and signaled much earlier interest rate hikes. Historically, there has been some inverse correlation between the long-term real interest rates and the performance of the FANGs. So we're seeing some of that now as the interest rates rise. Not to mention, the FANGs also posted mixed earnings, with Facebook and Netflix posting weaker earnings due to regulatory headwinds and post-pandemic normalization of demand, respectively. This also pushed the FANG's performance down. We think interest rates still remains an overhang on the big tech stocks, which could prevent any sustained rally in the short term until a potential dovish pivot from the Federal Reserve. As for the Russian-Ukraine conflict, we think that there has been minimal direct impact on the FANGs. A number of the FANGs have taken actions against Russia in response to the invasion, such as Apple and Microsoft stopping all product and services sales in Russia, and Netflix refusing to carry Russian state-backed channels on its platform. But we think that there is insignificant revenue exposure to Russia. We think it would have been worse if the FANGs did not act. There would have been some social backlash, not only from users, but also from employees. But we think that there could be some indirect impact from the conflict. These could be in the form of higher fuel costs, dampening consumer spending, power and global growth. Higher costs for semiconductor materials as well that come from Russia, such as neon and palladium, and perhaps a more hawkish Federal Reserve posture for higher interest rate, higher inflation.
Would you say that the interest rate hikes will be done by the middle of March?
No. The market is currently expecting 6 rate hikes in 2022. This will depend on how inflation progresses through the year and whether it will ease as supply chain issues abate.
Will these interest rate hikes have an outsized influence on U.S. tech stocks?
Okay, we don't expect a collapse in the big tech stocks due to interest rate hikes. Historically, the performance of the stock market, including the tech stocks, do not show a clear correlation with the Federal Reserve's interest rate hike cycles, but rather showed a sharp corrections, mostly due to economic conditions, such as recessions. We think that as long as interest rate hikes are gradual and do not cause a recession, the big tech stocks can still perform and in fact lead the recovery as their growth drivers remain intact.
Amazon has just announced plans for a stock split. What are the options for investors?
Yes, Amazon recently announced a 20-to-1 stock split effective June 6th. At the current share price of around $2,900, we think that a stock split will make the shares more accessible and could attract more retail investors.
Okay. Thanks for letting us know, Timothy. We've covered lots of ground today. Let's talk again soon.
Thanks, Roshan.